Assalamu alaikum friends, welcome to part 3 of financial reporting. So I'll be discussing section C here. Here you can see there are two questions worth 20 marks each. So the total for this section is 40 marks each. Okay, here you have to write or you have to do calculations using Excel. Whereas in section A and B, which was in part 1 and 2 of this video, if you haven't checked it out, by the way, you can check it out. Right, it will be on my playlist, financial reporting CBE. So you can go there and check part 1 and part 2 where I discuss section A and B. Section A, which was just multiple choice questions, you'll be given 4 options or you'll be given drop down list will be there. You have to select one or you have to drag. Okay. Or you have to type one answer. So section A was this. And section B is similar like section A. The only difference is you'll be given a case study. 3 case studies are there. Based on that case study, 5 questions will be asked. And section C will be 2 questions. Okay. One whole question. Okay. So 2 whole questions will be asked. And definitely the amount of information which you have to read in section A is bigger. Take it any paper, whether it's financial reporting, tax, audit, financial management, or performance management. All the 5 papers works the same way. On the left, you will be given the case study. As you can see, okay, it's a long case study, right? And then on the right, you will be given the requirements, 3 requirements, and then you are given the Excel. That means you have to do your workings in your Excel, okay? So before we do this, let us read the requirements first so that it gives you an idea of what you're supposed to do. Part A. Prepare a schedule of adjustments required to the draft profit before interest and tax in the trial balance to give the profit or loss of Triage Company for the year ended 31st March 2006 as a result of the information in notes I to IV. Okay, so if you can see here, some notes are given to you. Okay, all these notes you have to take, which is for part A. Part B, prepare the statement of financial position. Okay, so you will be asked to prepare like this, where you have to do some adjustments or financial position. Such type of questions you can expect in financial reporting. And part C, the issue of convertible loan notes can potentially dilute the basic EPS. Calculate the diluted EPS. There is no need to calculate the basic EPS. You should know how to calculate both the basic EPS and dilute EPS. But in this question, you're only asked to calculate dilute EPS. Okay, so when they say something in the bracket, don't do this, don't do it, because I have seen candidates actually doing this mistake, that they have not been asked to do basic EPS, they still calculate basic EPS. You will not be getting any additional marks. You are losing time to calculate that. That time could be spent somewhere else, right? Next, a note. A statement of changes in equity and the notes to the statement of financial position are not required. You should not prepare any notes. Okay, so this is how marks will be given. Part A it's 5 marks, part B 12 marks, part C 3 marks. So it shows that majority of your working will be for part B. Okay, that's how you are getting the 12 marks. So let us read the case study. A lot of the things we don't have to read, we can just, because these are just numbers. Okay, so after preparing a draft statement of profit and loss before interest and tax for the year ended, before any adjustments which may be required by the notes. So this is, you have been given the draft statement of profit or loss, okay, but this is before taking the 4 adjustments given below. Okay, you have to change it after adjustments. So these are the following 4 notes which are relevant to you. So let us read what are the note. Note number 1. Okay, let me highlight it for you. So okay, so Tri-Age issued $400,000 6% convertible loan notes on 1st of April 2005. Okay, so what you have to understand here is this. Let me highlight it. Interest is paid annually in arrears on 31st March each year. Loans can be converted to equity shares on the basis of 20 shares. 400 loan notes on 31st March 2008 are redeemed at par for cash on the same date. An equivalent loan without the conversion price would have required an interest rate of 8%. Okay, this will be given to you when convertible loan notes is there. Make sure that you know how to work around with convertible loan notes. Okay, the present value at the end of each year based on the discount rate 6 and 8% are given to you. Non-current assets. Okay, The reason why they have given you this interest rate is to confuse you which one to use, whether 6% or 8%. Okay, we'll go to that when we are solving the question. Now let us go to the note 2. Note 2 talks about non-current assets. Okay, so here they talked about note 1. Make sure when you're annotating, annote it in 1 or 2 words, not full sentence. Okay, so first point, you know, it's about convertible loan notes. Okay, point 2, they are talking about non-current assets. So the directors decided to revalue the lease property, okay, on October 2005. The company does not make an annual transfer from the revaluation surplus to retained earnings to reflect the realization of the revaluation gain. However, the revaluation will give rise to a deferred tax liability at the company's tax rate. So deferred tax liability will arise because of what? The revaluation. And tax rate has been given at 20%. The lease property is depreciated on a straight line basis and plant and equipment at 15% per annum using reducing balance. So leased property is depreciated on a straight line basis, but plant and equipment is depreciated using reducing balance methods. Two methods are used. Okay. Next, depreciation has been charged on. No depreciation has yet been charged on any non-current asset for the year ended 31st March 2006. Okay. Point 3. In September 2005, the directors of the terrorist discovered a fraud in total. So here they're talking about the fraud. Point 3. What was the total? In total, 700,000 which have been included as receivable in the above trial balance and had been stolen by an employee. Okay, so if you see the trial balance, receivable, just go to the receivable. Okay. Is it receivable or? Yes, included in receivable. So that's why if you see here, trade receivable note 3 is there. So in this, okay, it is 28 million. In this 28 million, 700,000 has been there, okay, included, but this is actually stolen by an employee. 450,000 of this related to the year ended 31st March 2000. Out of this receivable, 450,000 has been related to the year ended 31st March 2005. The rest to the current year. The directors are hopeful that 50% of the losses can be recovered from the company's insurance. Next is provision. Okay, they're talking about the provision. Point number 4. Is required for current income tax on the profit of the year. The balance of the current tax in the trial balance is under over provision for the previous year. In addition to the temporary differences related to the information in note 2, the carrying amount of the company's net assets are 12 million more than their tax base. Okay, so if you can see from the trial balance, they have linked it to each note. Convertible loan notes, you refer to loan 1. Okay, when they are talking about the plant and equipment and lease property, relate to note 2. Okay, note 3 is about trade receivable, note 4 is about interest. Sorry, deferred tax is note 4, current tax is note 4. Okay, so you can see from here it is relation to which note. So now question is adjustments, schedule of adjustments. Okay, you have to adjust it based on this 4. That's what they have asked. Now you have to adjust it using the 4 information given to you, which is worth 5 marks. Okay, so when you are using Excel and you have many, how do you start about when you have many requirements like this? You have 3 requirements and you only have one Excel. You have to clearly mention for which requirement you are answering. Okay, so first let us start with A. Okay, it is always advisable to start in the order given to you. Okay, especially if it's a calculation questions like this: A, then B, then C. Okay, so first we are going to write it. It's A. Okay, for part A, you are using it. You have to label it. You just cannot put numbers and all. No, Excel is not only about numbers. You need to clearly write it, because if you were doing the same question in the paper based, you would have wrote with clear headings and all. You would have been doing all your workings. So it's no difference when you're doing it in the CB platform. Okay, you have to take care of your time. How much time you're writing? You need to write the company's name, and you have to write what are you doing. It is a schedule. Okay, so you will get it from your requirements. Okay, if you see the requirements, the wordings of the requirements, you will know what you are supposed to write. So it is a schedule of adjustments to for the year ended, you have to write the clear dates. March 2006. Okay. Now you can both this out. Okay. So you can extend the line. You can undo if you want. Okay. You can extend the line so everything is visible. Next. What is the next? You have to note if you're writing in millions or in thousands. Okay. So you're writing in dollar, thousands. Sorry. Wait. This is what happens. You need to write dollar. You can put apostrophe sign and write 3 zeros. Okay. You need to put some sign between the dollar and the zero, because if you're writing dollar 000, okay, just see what's happening. Okay, what happens if you write dollar 000? What happens? It will show as dollar zero only. Okay, number. You have to write one text, any text it could be. Okay, I just put an a sign, apostrophe sign after dollar, and then I put the 3 zeros, so it is considered as a text now, not a number. Okay, so now everything will be dealt in this. You can do, okay, you can center align, do all customization and all wherever necessary, or you can do it at the end after everything is done. Next, first, how do you start? You always start with the so you have to start with what is the starting figure. They have told required to draft the profit before interest and tax in the trial balance. So you start with profit before interest and tax. Okay, what is that? You start with this. If you see the trial balance, this 30,000 you start with. Okay, this is your starting point. Always, whenever you are supposed to do some adjustments, you should know what is your starting point to adjust with. Okay, start with. So what are you going to write for a draft? Profit before interest and tax. So for profit before interest and tax, you can use this abbreviation. Okay, PBIT, it is understood. Profit before interest and tax. Per trial balance, okay? Because you are taking it from the question, so write per trial balance. How much is it? 30,000. Okay, if you see, this is also, they have taken it like this. So make sure that you also follow the similar way. Okay, be consistent. How they have presented and how they have given. If you don't want to deal it like this, you want to keep the whole number, then you have to write this 30,000. You should write it as 30,000 and add another 3 zeros after 30. That means it's 30 million. Okay, it will be taken as 30 million. So why to waste time writing too many zeros? You know, so just drop down the 3 zeros and write 30,000 here. 30,000. Okay, next, adjustments. Okay, so now you're going to do adjustments. So once you do the adjustments, what are the adjustments? Start. How are you going to start? Start in the order they have given you the notes. Okay, this is a very wise strategy to use in any question where adjustments has been asked from you in financial reporting or any other paper also. Always start in the order they have given the order. Okay, so start with the first point, which is about the convertible loan notes. Then you talked about the non-current assets, then about the fraud, then the provision. Okay, the fourth point. So start in that order so that you have not missed out anything. Okay, so first is convertible loan notes. Convertible loan notes, you are not taking only loan notes. What can you take? This is, you are adjusting profit. You don't take loan in the profit adjustments, you take it in the balance sheet. So what are you taking for convertible loan? The finance cost. Convertible loan note, for that you have to pay an interest. That interest amount only you are taking. That interest you write it where? In the finance section, finance cost. So you're only taking the finance cost of that convertible loan note, not the convertible loan note. This you need to understand. Okay, whenever loan is there, only the interest part will go to the P&L account. That's it. So the adjustments will be convertible loan note, finance cost. You can even write interest also, but you need to write either interest or finance cost. You cannot just leave it as convertible loan note. No, 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 no. Even if you write the interest amount also, it will be counted as convertible loan note. That's why your description needs to be very, very clear. You cannot just write convertible loan note, otherwise the amount with whatever you write, whether it's interest also, it will be taken as convertible loan note. And convertible loan note you don't take in the profit and loss adjustment. Okay, it's non-current liability. So you take in the non-current liabilities in the balance sheet. Okay, for here working is required. Okay, this also you have to understand. Whenever a working is required anywhere, you put it in the bracket as W1. That means working number 1. Okay, you annotate it like this. Okay, you need to deduct it, right? Definitely it needs to be deducted, but this we'll keep it as it is for time being. Okay, let us go to the next one. Okay, so next we are taking leased property. We are going to point number 2. Point 1 we'll keep it as it is for time being. Okay, because don't be in a hurry to do the workings. Another thing, presentation matters a lot. The way you put your answer matters a lot. It needs to be very neat and clear. When you have workings, don't never show your working in the main table or main area where you're writing your answers. Working has to be done below after you finish the main table. Okay, so that's why I'm keeping the space. I'm not starting with working 1 here. No, 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 no. Some more adjustments are to come. Okay, I need to fill up all the adjustments. After I get the final amount, then only I'm going to start with the working one. Okay, so whenever you're stuck like this, you can keep some space and you can start doing working 1, or you can write the descriptions and then you can go and start doing working 1, whichever you prefer. But since you don't know how much space you need, you don't know, so I prefer write all the description first and then go and start doing the working. Okay, because you cannot delete. What if you keep this much of space and you started doing your working here and you need more than the space, you see? So when you need more than the space, it becomes very untidy, because this is working, then again your continuation of this one. So don't do it. Should not be the case. Okay, if you keep more space here, it's okay, but if you're keeping less space, then more. Okay, then what is required, then you will run into the trouble, because again erasing everything, writing it, rewriting it again, and you cannot even delete it. You cannot add cells or add column. Okay, that option is not there in this Excel. In this Excel means in the CBE platform Excel, the one which is given to you, you cannot do it. Okay, so that's why I'm giving you some time. Okay, what is the next item? Next item is from your working too. Okay, what is next? It is about non-current assets. In non-current assets, we have two things. One is what? Leased property. Leased property. And the other one is plant and equipment. Two things are there. Okay. So we have amortization of leased property. Okay. Depreciation or amortization relating to, see, non-current asset itself we cannot take here, but the depreciation or amortization relating to non-current assets, that we can take in the P&L account. Okay, so when it's a leased asset, it will be what? We can take the amortization. Okay, so amortization of leased property, that's the next one. Okay, or when if you want, you can even write it note 1. Okay, this is note 1, so you can write note 1. this shows that you are referring this to note 1. Let me put a bracket so that it becomes very clear. You see? So this is note 1. Next. Or you can write note 1 in the beginning and then you can write convertible loan finance cost. Anything is acceptable. Okay, next is amortization of leased property. Okay, you need to mention the asset because there are two assets. One is plant and equipment, the other one is leased assets. Okay, you don't have an option where you click and you will get the correct answer. Here you need to erase everything and need to rewrite it. Correct your spellings, okay? And don't make too much of spelling mistakes. But for this video, you can just ignore my spelling mistakes, okay? Because if I go and start correcting, it will take a lot of time and I don't want to waste your time, so let us go. Main thing is not my spelling mistakes and all. The main thing you should learn is how to present your answer in the way, in an order structured way. Summarization of lease property. For this also there's a working. Okay, so we'll write working 2. Okay, this is note, second note. Okay, depreciation of plant and equipment. Okay, because we have a plant and equipment, we'll have a depreciation also. So depreciation of plant and equipment, same working. Okay, working it is in the same working. Okay, for note 2 the working sign working 2, so here also it's working 2. Next is, what is it, the fraud, point number 3. So the current year loss on fraud, because of a fraud there will be a loss, right? So what is the current year? You only have to take the current year. Okay, current year loss on fraud, so it is note, it is what, note 4. Okay, it is note 3, sorry. You see how I'm labeling each one. And finally the note for income tax expense, even income tax expense will come. Okay, so note 4 is about income tax. Okay, income tax, which will be note 4. For this, okay, there's a working number 3. Why not working number 4? Because for current year loss fraud there is no separate working, it's just one line thing which you can even write here also next to it. Okay, but we'll see later when after we finish work 1 and 2. So now after you do all, you deduct everything, then it will be profit for the year. It will be known as the profit for the year. You really need to be having a very good uh, speed at this, okay, because so much of working, so much of things to complete within the time. Okay, so you have 1 hour 12 minutes, 72 minutes should be spent on this. Next, now what should you do? Here, if I see the answer, what they have done in the answer is, they have also done the part B and then they have shown the workings. Okay. So if you want, then we could do that. Right? We also can show because it's the same question only, okay? So we can even start part B also. After profit for the year, you can start part B. Okay? Part B. The workings and all will come later. So start, it is the try age. Try age company statement of financial position, you need to write this. Okay, so statement of financial position as at 31st March 2006. Okay, you can even bold this out, the headings and all, the title and all, since you have done it here. Okay, try to be consistent always. Okay, since you have bolded here for part A, so let us do for part B too. Next. Okay. So here you need to do two columns. Okay, it will be $1,000. Okay, so if you want to go just, okay, here also is the same $1,000. Okay, this you can bold it out, but if you, rather than you dragging here and there, if you want to keep it in the same, you can just reduce this. Okay, so that you can see both. Next, you need two columns for the balance sheet. Next, you are starting with what? Definitely your non-current assets. So property, plant and equipment. Okay, PPE, property, plant and equipment, for which we are using working number 2. Next we have current assets. Okay, under current assets we have, so you have to label this, okay, non-current assets. Non-current asset. First you need to write the heading. I forgot to write the heading, sorry. Next, property, plant and equipment. Okay, PPP, for which we use working 2. Next we have the current assets. Okay, under current assets, what do we have? You can keep in space or you can write one after the other. Trade receivable. Okay, we have trade receivable. You can check from the list what are the current assets we have. Okay, So we have trade receivables, we have other current assets. Okay, these are the two things we have under current assets. You can see the trial balance for it. So trade receivable, and we have other current assets. Okay, per trial balance. Other, this you can put, there is no adjustments to do with this. This you can put as it is, 9,300. Okay, this 9,300. Let us see whether you can copy paste it or not. Nope, you can't. So 9,300 can write in the inside column, the first column. Next, trade receivable. A working is required, which we'll do later. Okay, so after you take it, this will be known as total assets. Okay, then we have the equities and liabilities. Leave a space. Equity and liabilities. Okay, so first we are going to start with equity. Under equity we have equity shares of $1 each. Okay, so equity shares of $1 each. Okay, you can see from here, this one, equity share. Next we have, what is the next item we have? That is other component of equity. So first you have to write about other component of equity. Okay, definitely there will be a section coming for other component of equity from working one. Because what was one? Convertible loan notes. So convertible loan notes means this loan note will be converted to shares. So even that will come as shares. Okay, so that, but that will be other that is known as other component of equity. That's why this thing will come, but in the original trial balance, if you see that it was not there. Okay, so for you have to be clear, or you have to be aware for this also, that sometimes new items might pop out. It will come due to your adjustments, which was not there in the original trial balance. Okay, so other component of equity. Okay, this was under working one. So you need to put under bracket working one, wherever working is used, put it. Then we have the revaluation surplus. Remember point number 2, we have a revaluation for non-current assets. So due to that revaluation, it will be adjusted in where? Revaluation surplus. This also we didn't have in the original trial balance. Okay, so revaluation surplus. Working 2. Next, we have retained earnings. This is there in the original trial balance. If you see retained earnings, okay. So for retained earnings, but retained earnings also has a working, okay, working 4 or working 3. Okay, 4, sorry, there's a separate working for retained earnings. Okay, because why return earnings? See, return earnings always changes. Okay, whenever you have to make the final account statement of financial position, remember retained earnings always major of the working is there for return earnings. Because of these adjustments, you see, because of convertible loan notes we have an interest, then non-current assets has depreciation and amortization, then there was a loss of fraud, then there was an income tax. So due to these expenses, even your retained earnings will change. Okay, that's why there's a separate working for retained earnings. Okay, And another thing what students do is, because majority of the mark is in section B, is this is a common mistake which you should avoid. They started preparing the financial position first before doing this. No, it is linked. Each part is linked to each. First you have to start with A, because without the support of A you cannot do part B, and then finally C. Okay, so retained earnings is also there. After that, leave a space, non-current liabilities. Okay, non-current liabilities. Under non-current liabilities, what comes? Deferred tax. We saw deferred tax comes in. Okay, we even have a note 4 for that if you see the original trial balance also. Okay, so working 3. For that we have working 3 for deferred tax. Okay, then we have what is another non-current liability? Remember working 1, the convertible loan note. So that convertible loan note is also non-current liability. Okay, 6% convertible loan note. Working 1. Okay, then we have the current liabilities. Okay, I can keep a space. So under current liabilities, what do we have? Per trial balance. What do we have for trial balance? Just see the current liability. Okay, it is 17,700. So this also you can write. Wherever adjustments is not required, you can write. Then we come to the current tax payable. Okay, for current tax payable, there are say. So we'll leave this. So this will lead to total equity and liabilities. Okay. And also, it's not that. The main thing is your financial position, statement of financial position or balance sheet should balance. It should tally. If it's not tallying, somewhere some mistake is there. If you have the time, I would say change. You can go and change the figures. But if you don't have the time, if you're running short of time, don't try to go and balance it. Stop wherever you are and proceed to the next question. Okay, and once you are done with all the questions and once you have time towards the end of the exam, you can come back and revisit anytime. Okay, never ever get stuck and use more than the time allocated to you for any question. So let us start next part C. Okay, so next is what? Next comes part C. Okay, part C is diluted EPS. That okay, you are supposed to calculate the diluted. You can write for EPS for earnings per share. For this, you are using working. Which working? 5. Separate working for that. Okay. First of all, you should understand you are only first presenting the main answers. Okay. Always is always like that for any question. First main answers and working comes at the end after everything is done. Okay. So you have set up. Now after working, you just have to input it. That's it. But you need to set the standard first. You need to set the format of it. You need to write it, the format of the statement of financial position, then the statement, the format for this. Now, once you're done with all the workings, just come here and put the number and that's it. That's it. This is a great time saver if you know how to do it. So now we'll be doing with the workings. Okay. Diluted EPS is just one figure here which you need to write. But for okay. So now let us start with the working. Okay. So first it is working 1. W1. You can even write W1. Name it. W1 is for 6% convertible loan notes. Okay. You see. You can even what do I say? Bold it out. Make it bold so you know the heading. 6% convertible loan notes. Okay. So how do you start? How do you start? If you see, okay, a convertible loan note, okay, what is it? What is it type of, which type of financial instrument is it? It is a compound financial instrument. Compound financial instrument means it is having a debt also, it is having an equity also in it. Okay, wait a minute. Okay. A note is not required. Okay, they have told that there is no need, notes to the statement financial position are not required. So this is for your explanation purpose, I'm saying. For you to understand why I'm doing your working. Okay, you should understand before I started doing the working, you should understand why such working is required, why we are doing it, why even we are calculating this in the first place. That's why first you need to understand it. What is this 6% convertible loan notes? It's a financial instrument. It's a compound financial instrument. Compound financial instrument means it is having a debt also, equity also in it. Debt component and equity component, which must both be quantified and accounted for separately. You have to account it separately, the debt part of it and the equity part of it. Okay, first that's why you need to calculate it. Okay, so when you are working like this, you need to start with, okay, leave a space, year end 31st March. Okay, what is it? Just look at to the, again keep the note 1 in front of you. Whenever you are working somewhere on one part, let's say you are working on note 1, so keep that note 1 in front of you. Okay, and this is for 31st March 2006. We are doing all the calculations. Okay, 31st March 2006 means how many years? 2006, 2007, 2008. 3 years. Why? Why is it 3 years? Issued this on 1st of April 2005, interest is paid annually in arrears on 31st March each year. The loans can be converted to equity on the basis of 20 shares per 100 loan on 31st March 2008. On 31st March 2008, it can be converted. So that's why, and you are paying it what? 31st March each year you are paying the interest. Okay. So 31st March 2006, 31st March 2007, 31st March 2008. Okay, after this year. But if you see here, it is only till 31st March 2006. But we need to calculate it because we have to take the debt part of it and the equity part of it. So we need for all the 3 years. If you want to find the equity, because equity will get what after 3 years only. First we have to get that equity component from it. So it will be year ended 31st March 2006, 2007, 2008. Okay. Next. Okay, let me make this small. Okay. So if you see, I cannot see this whole thing. It can be seen here only once I click here because I have dragged down it. So now, next is what? Outflow. Okay, it will be in thousand. Okay, outflow. Wait, outflow. I'm dropping down the three zeros by the way. Okay, make sure that you write it. You are not it like this, which I'm not doing it here, but you make sure you do it. And here, second column, it will be what percent are you using by the way? 6% or 8%? Decide it. You need to decide that first. You are putting 8%. The 8% because you are always using the interest rate. Okay, this one, an equivalent loan without the conversion right. Just if you're having a loan, pure loan, no conversion right, then the interest is 8%. So you're always using that interest when you have to take out the equity and the debt component separately. Okay, that's the rule. So it's 8%. Double click 8%. Next, third column, present value, PV. Okay, PV stands for present value. So 8%. Okay, 8% on what? Okay, what will be the outflow? Just make sure that you write the interest rates also at 8%. Okay, from the table, from this table. 0 0.93, 0.86, 0.79. Next, outflow. How are you taking it? Just I'm giving you some time to observe and see what's happening around. Okay, what will be the outflow? Outflow is basically your interest. What will be the interest? Definitely in the first, second year, only interest, third year, interest and the principal amount. So first you need to get that right. What is the interest? Okay, I'm giving you some time, go through it and get it. Okay, so just look at here. Issued 400,000, $100. Okay, so you multiply 400 by 100, it will be 4 million, right? On that 4 million, sorry, it will not be 4 million, it will be 40 million. Okay, so on that 40 million, if you have to apply 6% because interest is 6%. This is discount factor is 8%. Okay, 6% when you are taking the interest on this. So 400 into 140 million on that, if you are taking 6%, it will be 2.4 million. Okay, 2.4 million. So you will be writing is 2400 because you are dropping down the three zeros. Okay, again same. Third year, it will be this, the 40 million plus the interest 2.4. Okay, so it will be 42,400. 42,400,000. First, you need to multiply this 400 by 100. Okay, that's how you are getting 40 million. Next, present value is nothing, just you multiply it. Okay, so put equal sign, then this multiply by this one. Okay, close bracket, enter. And now you can drag this to the other cells. You need to know how to work the functions in Excel and how to copy paste it to the other cells and all these things are basic. Okay, common things which is expected from you, you should know. If you don't know, make sure that you practice this things. Do as much calculations in the Excel as possible, much. Okay, and see, are you able to do finish all the calculations, write everything, especially part C, section C questions, are you able to do it in the time given to you? Okay, so next, what is it? What is it? Debt component. This is what you have taken the loan and you have discounted it and found the present value of a loan. So this will be known as debt component. Always, whenever a convertible loan is given, first you find out the debt component. Then the remainder is the balance will be the equity component. Okay, so the debt component. Okay, and trust me, all this whatever you're doing here in financial reporting, this will be again, it will be there in your SBR also, strategic business reporting. So there is no way that you can play around this and miss this area. If you're not understanding it properly, make sure that you understand it. Make sure someone of your friends or your teachers whom you are going to, make sure you ask them those doubts. Don't keep it, because it will be there in the higher level, and trust me, things will really get hard in the higher advanced level when it is not, when the doubt is not solved in the basic level. Okay, this is the foundation level, right? Because what I know, what most of the students try to do, they try to do section A and B, they do well, and they somehow try to pass through those two sections. Okay, but definitely this will be there in section C, and there you cannot. Okay, because there's no multiple choice questions, you have to write. So debt component is the total of this. Okay, once you want to find, just use the sum function. That's it. Next, the equity component is the balance. Okay, balance. Equity component is the balance. Okay, what is it? What is the process of issue? This has to be 40 million, right? That means 40,000. But out of it, it is this, because this one is known as the proceeds of issue. 40 million. Okay, so this, if you want to find, just put equal sign. This, you can even use calculator to do this, but I would prefer using Excel, is much faster since the numbers are already there. You just need to click the cell. Okay, so 2208, this is the equity component. Now what's next? What's next? The finance cost. You have to find the finance cost, right? So how much will be the finance cost? Okay, you need to write finance cost. Finance cost will be how much? Finance cost will be, okay, 8% of this amount, the debt component. Okay, that is your finance cost. Okay, so it will be this multiply by this 8%, 3023.36. Okay, you can even round this to the whole number. Okay, rather than writing in decimal 0.3, you can round this to the whole number. Okay, yesterday I don't think this I have taught for financial reporting, but for the other papers when I was discussing, okay, this is how you round up, equal to, write round. Okay, whenever you want to round a number to the whole decimal place, click that number or that cell, comma 0. If you are pressing comma 1, it will round it up to one decimal place. If you want to round it up to whole decimal place, whole number 0. Okay, so 3023. This is your finance cost. Next, what else you want to find? The carrying amount, because you want the balance sheet also. What is the carrying amount of the loan? In the balance sheet you need it. So you are doing two things at once, okay? You are doing the working for the part A also, part B also. Simultaneously you are doing together. Okay, all those things definitely in the first attempt you will not understand when you're doing it first. It takes a lot of time, trust me. Here 1 hour is gone and I'm still in the first part, first working. So I can, you know, have an idea how much time it will take to finish though. Just this question, another question is left. I think that question I should do a part 4 of that in the part 4. In this video I don't think it's possible to do it. Anyways, let's get back to the question. So carrying amount of the loan note at 31st March 2006, okay? So the next, write it, okay? Write it down. So you can just highlight it or bold it out, whatever the number you need it later, because you definitely will be copy pasting it, right? So make it bold or highlight it, or okay. Carrying amount of the loan note. Write the date. Carrying amount at 31st March 2006, because the financial statements and all, if you see, it's for 2006 only you have to make, okay? So you want to know the carrying amount at that date. What will it be? What is the carrying amount? Okay, it is equal to this amount, the debt component. From there you need to add, okay, again a bracket. Add what? This interest. Okay, this is the finance cost, current year finance cost, minus this 2400. Okay, so you can see 3 boxes are highlighted. Press, okay, 3438415. This is the carrying amount of the loan note. This also I can bold it out. Whatever you need to copy paste later in this main table, you can bold out that figure, okay? This is a key for you to identify what are the main answer, because so many workings, right? So many numbers are there. It's easy for you to get confused. So when it's bold, or you can even highlight the cell like this, so that you know these are the answers. But if you highlight it too much, then it becomes confusing. So just bold it out. You don't want to fill, no fill. So that is working 1, okay? Now you have an option, okay? When you're doing such working, either you can finish all the working in one go and then finally start putting in the table above, or you can, as soon as you finish working one working, you start copy pasting the number. So I'm going to copy paste this number, okay, in their correct places. So where will the finance cost go? This 3023, copy, it will go here, okay? This one, paste. Why it is paste as 0? Because I have rounded up. I have used a formula. Whenever formula is used, okay, this is how you have to copy with the formula, okay? This copy, okay? When you paste, go to paste special and click on the value. If you are clicking on the formula, it will copy it with the formula itself, but I just want the value, okay? Okay, so you see the value has come here. All this copy pasting, going up and down, you know, takes a lot of time, trust me. Finding out the correct right source of information, right figure to take, needs a lot of practice. Same question you need to practice multiple times also, at times similar type of question, not same type but similar type of question, where you have other questions where loan notes are there, like this convertible loan notes are there. So practice similar questions together, one after the other, to see the pattern. Okay, slowly you will see that you are picking up with the time, you are improving, okay? You are getting faster and faster. So I have taken this one there, okay? Do I need to paste this answer anywhere else? No. What is the next one? The carrying amount of the loan, 38415. So where do I need to take this? This I need in the balance sheet. Okay, so copy. For this also a formula has been applied. If you say formula, so when I'm copying it, I just want to copy the value. Where am I going to take it? Here. Okay, in the first column, this column. So paste values. That's it. When you okay, so 38,415. See, so next, that is done. Working 1 is perfectly done. Now let us go to the working 2. Okay, which is non-current asset. Okay, so working 2, non-current asset. Make sure that you write the name of that working, and I'm going to bold this out the same way I have did for working 1, because I told be consistent. Next, under non-current assets, remember two things are there. One is lease property, the other one is plant and equipment. Two things you have to deal with. So first we are going to deal with the lease property. Okay, under lease property, how are you going to start with? You have to know the gain, what is the gain on the revaluation and the carrying amount of the lease property. Okay, why you need to know the gain on the revaluation? Remember, retained earnings. Retained earnings, it will be there in the revaluation surplus. So you need to know the gain on the revaluation and the carrying amount of the lease property. Why? Because you need to depreciate. Carrying amount of lease property will also go to the balance sheet. Okay, so gain on revaluation and carrying amount of lease property is of leased. It is understood of lease property. So let us start the carrying amount. At whenever you're writing beginning and end, write the date. Okay, carrying amount at which date? First, okay, 1st April 2005. What would be the carrying amount? Okay, in the bracket you need to put another amount, or you can show here equal to. Okay, let us go to point number 2, non-current asset. Okay, so you can go here and see here the lease property, 75,000. You can see here it is 75,000, and this one you are taking the lease property, you are taking, I think it's on a straight line basis, right? The depreciation and all. Okay, so from this 75,000 you have to deduct this accumulated depreciation. Okay, amortization, sorry. So when you're taking the carrying amount, depreciation you're deducting it. So 75,000 minus 15,000. Okay, so when you're taking here equal to 75 minus 15,000, 60,000. Okay, the minute they go here, they will be able to see the working here. Next, amortization to the date of revaluation. Amortization to date of revaluation. Until the date of revaluation, what is the amortization? Okay. When is the amortization? By the way, revaluation date? You need to check that. It was on 1st of October 2005. Okay. So you need to make sure that you write the date towards it. So this becomes easy for you to take. 1st October 2005. Okay. So what is the working? Equal to, you can either use a calculator and write it, or you can show the working here in the Excel. So here, how much it will be? Just look at the cost. It's a straight line basis. Okay. So on this cost, 75,000. You are deducting this by 25, dividing it by 25 because 25 years. Then you are multiplying it by 6 months only. Okay. Why 6 months? Because October, November, December, sorry, April, May, June, July, August, September, 6 months. From April, 1st of April 2005 to 30th or 1st of October 2005 or 30th September 2005. It's just 6 months. Okay. So 75,000 divided by 25, arrow, multiply by 6, divide by 12, or you can multiply by half, is the same thing. 1,500. This needs to be deducted. Okay. So you can put a minus outside the bracket. After equal sign, put minus and then bracket. It will automatically take it as a minus figure. Why? Because the figure in the bracket will not work out. If you put bracket figure and when you're doing any function, some function or unit deduct, it will not take it. Because Excel in your CB platform only deals in minus figure, not with the bracket. So carrying amount at revaluation. You clearly need to write these terms, okay? It's not just the number which is counted, also the way you are writing it. It needs to be understood what you are calculating. So just take the sum function and see. 58,500. Now let me show you this demo, okay? Since most of you will be like, why not bracket? Just put bracket 1,500 and see what's happening. If you put the sum function, it will not deduct it by 1,500. You see, only 60,000. So don't do the silly mistakes. The same I have been explaining you, even in performance management, even in taxation, and now even in financial reporting, same for all the ACCA paper on CB platform. Okay, this needs to be done. Okay, or you might be thinking, why sum function? Because we are minusing it. Okay, because this is already in minus, no? The other way you could do is, if you don't want to use sum function, if you just want to deduct this 60,000 by 1,500, you can write here less. Okay, before amortization, like this. Just click on this. You can write like less like this, and you can put this a positive number, this one, and then deduct it. Okay, that way is also possible. But let us deal like this. Next, gain on revaluation, the balance. So the carrying amount is this. What is the gain on revaluation? Whenever you're getting something through balance, okay, just make sure that you write that it's the balance. Okay, what is it? It is 7,800. Let us check here. How? The debtors decide to revalue the lease property as 66.3 million. So this we cannot find out. Okay, before you find out this, write this here. It will be 66,300. This is the revalued amount. That's what they told. So revaluation. Revaluation at which date? At 1st October 2005. Write the month correctly, the date correctly, the year correctly. Okay, so this is just the difference between these two is the gain. It's a gain, isn't it a gain? Because see, from 58,500 it increased to 66,300. That's why it's a gain. Sorry, it's not a sum. It's this minus this and 7,800. Okay. Next. Remember, you need to find the carrying amount at which date? 31st October 2000. Sorry, 31st March 2006. But if you see here, this one is October 2005. We should not stop here. Okay, from October 2005 to 31st March 2006 we have to take. So October, November, December, January, February, March, another 6 months. Amortization. Okay, so we have to take the amortization after the revalue. On the revaluation account amount we are going to amortize when there's a revaluation happens. On that only we take what? We amortize. Okay, so amortization. To year ended 31st March 2006. Okay, make sure everything is to 31st March 2006. Okay, that's what the requirement asked you. How much will it be? You need to do working here. Okay, here equal to. So this is the revalued amount. On this you divide it by how many years? How many years do you divide it by? If you see the lease property, okay, 25 years we took. Now how many years are we taking? Just look at note 2. Okay, how many years, number of years you need to divide this by? Just go through it. Definitely there will be reduction in the number of years. Okay, before when we took for this, sorry, when we took for this it was divided by 25. Now we are dividing it by how many years? Definitely there will be reduction in here because now it is after a year. But what is the number of year? It is 19.5 years. 19.5 years. How 19.5 is very shocking, no? From 25 to 19.5. The reasons are there in your marking scheme. You can go and read. I'm okay. You don't have to write the reasons how you got 19.5. But let me tell you the reason because it's important that you understand how 19.5 here. Okay. So if you see the annual amortization, okay, what will be the annual amortization? It is 3 million. How 3 million? 75 million divided by 25, 3 million annual amortization. Okay, so therefore the accumulated amortization at 1st of April 2005 of 15 million represents 5 years amortization. Let us go here and see. Okay, here if you are saying 15 million, okay, this is little tricky. It's not easy for anyone to find out. That's why I'm going slow and I'm explaining you how. If you see the lease property, it is 15 million, but it was supposed to be 3 million. Okay, they accumulated, they are saying, at 1st of April 2005. Okay, on this day they accumulated. Okay, so first what did we do? We found annual amortization. Annual amortization 3 million. So accumulated amortization at 1st April 2005 of 15. It represents 5 years amortization. How 5 year? 3 million, 3 million, 3 million, 3 million. So 3 into 5, 15. No, 5 years. So at the date of revaluation, when was the revaluation? 1st October 2005. There will be a remaining life of 19.5 years. Okay, because from 25, you are minusing 5 years. And you are minusing half. Why? Because it is October, from March to October, 6 months. So 25 minus 5 years, 20 minus half, that means 0.5. That's why it's 19.5. If after my explanation, if anyone didn't understand how 19.5, you can contact me on my Gmail, sabiakhtar0@gmail.com. Okay, and I will surely reply you there, because this is something which needs to be very clear. Every step you do, you have to be clear cut why, how the figures I'm getting, why is this figure. Okay, you cannot keep any doubt and move ahead. Never keep the doubt. So here it will be equal to this, divide by 19.5. okay, 19.5 into 6 months. Okay, into 6 months means into half also you can do, into, okay, let's, sorry, you can do into bracket again, 6 divided by 12, 1700, 1700. So this is amortization always deducted. Again put a minus sign outside before the bracket. Okay, now what is it? Sum, sorry, equal sign you need to put. Okay, otherwise it will not work out the sum function. This and this, so this is the amount. Okay, carrying amount at 31st March 2006. Okay, this also, let me write it in bold, just highlight even the gain. Okay, now you need to understand another thing. Okay, of the revaluation gain. Okay, next time what I'm going to do, when I'm going to do another paper on financial reporting, I'm going to show you the marking scheme as it is. We are going to do it so that you understand this better, because right now I'm saying you, I don't know how many of you are able to catch, understand me. So it's better I show you the marking scheme. Now the revaluation gain, what is the revaluation gain? 7,800. This 7,800,000. Okay, this 7.8. Some of it will go to the revaluation surplus, some of it will go to the credited to the deferred tax. How much of it will go? What is the percentage? Okay, so what do you need to know? Okay, how do you know how much of it will go to the revaluation surplus and deferred tax? Because you have not been mentioned anywhere, right? Here, read it. That does not make an annual transfer from revaluation surplus to retained earnings to reflect realization of revaluation. However, the revaluation will give rise to a deferred tax liability at the company's tax rate of 20%. You see, because of this revaluation, it will give rise to deferred tax. That means 20% will go to deferred tax. The remaining balance, 80% will go to the revaluation surplus of out of this 7-8 million. This 7-8 million. Where is this? This 7-8 million. So even that you can make a note here. Okay. %, revaluation gain, to revaluation surplus, 20%. Just it's better I copy paste this here. Here just change the figure. 20% revaluation surplus to deferred tax. Deferred tax. It is credited to deferred tax. Okay. So just find out the 80%. Okay. 80% multiply by this one. And the balance is 20%. Okay. Or just the difference between this minus this. Okay. You see. Now, it's not over yet, guys. Plant and equipment is left. Okay, so plant and equipment. This is easy, okay? Not much work is required here. Because definitely examiner will not give you so much of work to do in every part. It's just only in one area where a lot of work is required. Carrying amount at, always write the date. Because it matters a lot. Carrying amount at 1st April 2005. What is it? What is the amount? So if you see here, what is it? It is 72,100. From here you are deducting the accumulated depreciation, which is 28,100. Okay, so here equal, you can either use a calculator and put it, but I'm using Excel for that. Okay, equal to 72,100 minus 28,100. From here you have to deduct the depreciation. Okay, depreciation for the year ended 31st March 2006, 15% reducing balance basis. Okay, depreciation is reducing balance basis 15%. So just take 15%. Okay, I'm going to put a minus because depreciation is, okay, on this I'm going to take 15%, which is 6,600. Okay, so now I'm going to put the sum function. Sorry, just take this too. This is the carrying amount at 31st March 2006. Okay, so this also I'm going to bold it because I need it in my balance sheet. And this, the fourth, okay, so now I'm going to place it wherever it is there to be. So amortization and depreciation of plant and, so this depreciation of plant and equipment 6,600. This I can copy paste it to here. First one, part A, depreciation, paste. It will not happen because formula is there, so undo. Now paste special. It's already values, but again you need to click it on it. Okay, minus. Even this convertible loan, no, even this will be minus. Okay, so make sure a minus sign you put in front of it. All this will be minus from 30,000. Next, what is it? The amortization. How much was the amortization? Okay, here you need to be careful. Okay, when you're going to amortization, you see, not only this, you have to add this also. Both this amortization, 1500 plus 1700. Okay, so when you put here you can write equal to 1500 plus 1700. Okay, this you can put in minus. But if you put this minus, then make sure this is also in minus. Okay, next, what is next? Property, plant and equipment. Okay, balance sheet, working 2. So here we can put here, what is it? You just need to add equal to this 64,600. Okay, this is the carrying amount of the lease property, plus, you see, rather than dragging, you can even write here, plus this one 37,400. Close the bracket, enter. You see, it's already here. Okay, so in the revaluation surplus also you can start doing your work. Okay, so when you go down, revaluation surplus. Okay, what are you going to do in the revaluation surplus? It is this. We've already taken it. How much of it will go to the revaluation? The 80%. 6 to 40 will go. This will go. Okay, so copy. But it's with the formula, so you have to copy the value only. So let's see. Paste special. Remove the tick mark, again put values. Okay, 6 to 40. Revaluation surplus. So just check any other area is it affecting or not. Deferred tax, more working is there, so deferred tax we cannot touch right now. Okay, now let us go to the working number 3. Okay, so working 3, what is working 3? You have to label it. It is, for fraud we don't have a working. Okay, not working is there, so deferred tax. For deferred tax there's working 3. This also I'm going to bold it out. Okay, so now the revalued property and other assets. Okay, and other assets, revalued property and other assets. How much is it? What is the revalued property? It is 7,800. And what is the other assets? If you see, okay, here, fourth point. So provision of 2.7 is required for income tax and blah 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 blah. In Okay, in addition to the temporary differences related to the information in note 2, the second note, the carrying amount of the trenches net assets are 12 million more than their tax base. Okay, this means it's another asset. Okay, 12 million more. That's why we are adding 12 million also with the revalued. Okay, so it will be 7,800. This plus, sorry, plus. Okay, plus 12 million, that means 12,000 into what is the tax? 20%. 20% is the tax rate. Don't ask for deferred tax, they didn't give. Okay, income tax or whatever tax it is, the rate which they give, it is used for income tax also, deferred tax also. Okay, so which is 3960. Next is, what is it? Provision at 1st April 2005. What is the provision at 1st April 2005? You need to deduct it. Okay, let us go and see the trial balance. It was 3,200. You see, it's a credit balance, so 3,200. So minus 3,200. Minus 3,200. Next. What is next? How much it increased? Okay, the increase in provision. Okay, we don't know whether it's an increase or decrease in provision. So we'll leave this one line and go to the next one and write the revaluation of land and buildings. L and B, land and buildings. You can even write L and B, it's okay. In the exam, you can write. What is it? How much? We know how much for the deferred tax will go, so we can just copy paste it. Just now we have calculated this 1560. So copy, paste, but paste special. You need to go down to see the all the options. Paste special, again, values. 1560. Okay. And this will be again deducted. So in front of this, you can put minus. Minus. This is why I always tell copy paste the value, not the formula. The reason is if you put the formula and if you want to put a minus sign somewhere, even in the original formula where you have applied, it will change there. So everywhere it will change. So rather than doing it, just copy paste the value. So whatever you will do with this value, this will be in minus, but the original this 156, it will remain as 1560. Okay, the original function will remain as it is. Only this amount will change. So you can individually change the amount in other places by not affecting the original formula. That's why I always prefer copy pasting value, not the formula or the function. You can try it yourself and see what happens when you copy pasting the formula, the function, and want to change it somewhere, it will affect in all the places. So 1560. Okay, so it is an increase. How do you know it's an increase? Okay, just look at the sum. Because it was 3,200 1st of April 2005. Okay, from here it has increased to 3,960. So it's an increase in provision. Okay, next. What is next that you want to write? It is just the balance credited to profit and loss, whether it's debited or credited. That also you need to understand. Balance credited to P&L or profit and loss. How much? Just the sum function. Okay, if you take the sum function, it will automatically find the difference between these two. Just undo if you want to undo something. The reason it didn't take because I didn't press the equal sign. So equal sum. You see the difference they want to show, 800. So only that increase amount 800 will show. Because from 760 was an increase, then it increased to 1560, so 800 increase. Okay, so this I will leave as, if you want to change this as positive, okay, what you can do is just put a minus sign. No, it will not work out. You can multiply this by -1. It will automatically lead this to positive. Okay, just multiply it by -1. It increased, that's why. So that incremental you are putting in P&L. Okay, credit. It's a credit balance income. Next, the fourth working. Okay, so deferred tax will put wherever we have to put. Okay, so now when we go to the first one here, income, wait, not balance sheet, income tax, this working 3, this we can do, start doing. What is it? So it will be, this is 2.7 million is required for the current, on the current year profit. So from this you are adding 700 and you are deducting that 800. Okay, why are you adding 700? Because it's here current tax. Okay, so with this provision of 2.7 which is required for the current income tax, okay, with this 2.7 you are adding this 700 and then you are deducting the deferred tax asset 800 because it's credited, and income tax only you are taking debit side, so that's why credit side you have to minus. Okay, so it is, what is it, 2700 plus 700 minus 800, 2600, it will be minus figure. Okay, just put a minus outside the bracket. Okay, so now where else do you want it to change? Return earnings, don't worry about it, we have a separate working for that, that will be in working 4. Okay, but now the deferred tax component you can add current tax and deferred tax. Okay, so deferred tax is, this is the deferred tax asset. Okay, this is only for P&L, but revalued property and plant 3960, this will go to balance sheet here, paste special values. You see, next for the income tax. Okay, here the current tax payable, how much it is, 2700, because here they have told it 2.7 is required provision for current tax, so it's 2.7 thousand, 2700. Okay, so we are almost done with everything. Even the equity shares you can put, what is it, equity shares will put this side, what is it, it is, just look at it, 50,000. Okay, it will be 50,000 only, so 50,000. Okay, so now if you see, you're only left with other component of equity and retained earnings, and I think the rest all is done. And trade receivable will do when we find the fraud. So trade receivable is basically, okay, what is the trade receivable here, it is 28,000. From here we are minusing the fraud. What was the fraud? So if you see, go to point number 3, the fraud, 700 have been included as receivable. So basically we are taking the 700 out now from the receivable, that's it. So 28,000 minus 700, that's what we are doing. Just undo Okay, so 27,300. So now we can add the total here. Sum function, this and this, the current assets. Total assets, again the sum function, this and this. Okay, next. So what else we need? We need retained earnings and other component of equity, which is in working one. So other component of equity, we can just go to working one and take from there, which is this 2208. Copy, because it's the equity component, right? So it comes in other equity component in your balance sheet. Paste special, just the value. 2208. So what's next? We are only left with retained earnings now, and we are done with rest all, right? So now we can find the total here. So sum function, non-current liability, the total we can find out, and also for current liability, the total we can find out. So just undo it. Sum function, so we are now only left with the retained earnings from the balance sheet. And let us go to part A. Okay, so we only have the current year loss, that's it. Okay, so here just what is the current year loss on profit? We can find out from here how much it was. This was the fraud. Okay, and from this 450 of this related in the year ended 31st March, so we have to take 450 out because this was related to 31st March last year. So last year we have to take, so it's basically 700 minus 450, that's it. 250. But this 250 is it should be negative again, so put a minus 250. So now we are done with it. Now profit for the year is just the sum of all. To sum. So it is 14327. This is the profit for the year. Okay. Now another thing which you can do is prepare a schedule you are supposed to find to give profit or loss. Okay, so that's the main requirement. So now what you can do is you can highlight this cell. Okay, you can highlight this cell like this. No fill, and then go again and highlight it. So I'm not understanding why I'm not able to highlight it. You see, so you can highlight it like this. Okay, to point out that for part A this is the main answer. Now coming to part B. So part B, balance sheet is done. The older thing is retained earnings. You need the retained earnings, that's it, to balance it, right? And another thing you should understand, that whenever there's a previous year thing is given, you should not take it, okay? Because it's a prior period adjustment. It is reported where? In the statement of changes in equity. That you don't take. That 450. Okay? And another thing is this insurance. The directors are hopeful that 50% of losses can be recovered from the company insurance. This also you should not take it. Why? Because this insurance claim is what is it? It's a contingent asset according to IS 37. It's a contingent asset. You should understand this, and you should be ignored. Okay, it's just they are giving some probability. That's it. So this should be ignored. Some of you might take this also as a in the financial statements. the insurance claim and all. No, you should not take. You should ignore it. So you should know how do you know that you should ignore these things? This is why you have to understand and learn every standard, because when a question is asked, it is asked together combined. You should know which one to use in which. It's not specific that only the standard only you have to use. No, 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 no. For this, for example, this one, company insurance, you have to use IS 37. So according to IS 37, this is contingent asset. So you should ignore it. Okay. Not everything is given to you should take. Some things you should ignore. You should know the IFRS and IAS to know whether you have to accept or reject. So on that, we are almost coming towards the end, where we have to work out the retained earnings and the EPS, diluted EPS, and that's it. So let us now do the retained earnings. Okay. So working for is for retained earnings. Okay. So what was the balance? Balance at 1st April 2005. You always have to start with the opening balance. What was the balance? You will get it from the trial balance. Okay. Just look at retained earnings. It is 3,500. Next, prior period adjustment. So if there is any prior period adjustment, this now has to be adjusted with retained earnings. Okay. Prior period adjustment. That means it's not this year adjustment, but you need to adjust it. You just cannot ignore it simply. At least in retained earnings calculation, you have to, because this comes in statement of changes in equity. So even return earning comes in statement of changes in equity. Okay, that's why. And it's a fraud. This tells you that you are using which one. Which one is this? You are using this 450. Remember this 450? This 450,000. So this you have to minus it. Minus 450. Next. This is why you need your part A to be correct for this. This is why I was waiting for the calculation of return earnings. Why? Because you need your part A answer to answer this. What is it? Adjusted profit for year. For whenever you make some profit, it is added in retained earnings. Adjusted profit for year. So you see how your answer is following through. If you make mistake in part A, definitely you will make a mistake in retained earnings, and then your balance sheet will not balance. There also you will make a mistake. It just follows on. And adjusted profit for the year from where? From A, part A. Make sure that you write it like this so you know which one you are taking. So it is from part A. What is the part A? Let us go to part A. Profit. Just this one. Okay. So copy this here. This you need for the balance sheet working. Okay. Paste special. Unclick. Okay. Again select 14327. Without, it will not highlight. It will just show. Click the value. That's it. So now sum function. Just add. Sorry. Take all these three. Add. Okay. This is the amount which will go to the balance sheet. So this is the balance at if you see everywhere I have written balance at, okay, this will be in bold. Balance at 31st March to the balance at 31st March. Okay, even here, everywhere I have written the date. Everywhere, all the workings, clear date has to be there. At what date, opening balance, closing, everything. Okay. So now, this will be going where? This will be going in your balance sheet. So this I'm going to copy paste it in the balance sheet. Here, paste special, value. Okay, now sum total of all these three, sorry, total of all these three. Now what is it? Now is the time you will know whether it balanced or not. Okay, equal to sum again. So you're adding this with this. Okay, so that means it should be equal to this balance here, sum. Okay, so you're adding all these three. So just see whether it balanced or not. 138,600, 138,600. It balanced. It balanced. You can even highlight also, like how you did for this, to show that it balanced 138,600, 138,600. But mind you, sometimes it does not guarantee that if your balance sheet balances, you are correct. Somewhere you might have omitted one thing where it was affecting two sides. So in that way also it will balance, but the amount will be wrong. So do not become so happy when it balances. But if you have done all your workings, you can, even if it does not balance, you can be sure that you will get the maximum amount of marks for your workings. Only that 1 mark you will lose for your final answer. Okay, so do not be sad. And finally, part C, 3 marks, diluted EPS. And with this I will end the video, because for the second question, which is question 32, I will make a part 4. Okay, another part for that, because then it will be too much for the students to consume, digest too much of things. Already this question itself will take a lot of hours to go in your head. So I don't want to stress you out. I will make a fresh new video on another part. Okay, so let us go. We have a working for that. Okay, which we need to put here. Okay, so working 5, diluted EPS. Okay, what is the additional shares on conversion? How many shares you are getting on conversion? Shares on conversion. Okay, so this is the maximum additional shares on conversion is how much? You need to do your working. How much is it? What is the amount of the loan? It is 40 million. If you see here, 400 into 100, okay, 40 million. So 40 million into 20 over 100. Why? Because 20 shares. 20, okay, so it will be 40 million means 40,000 into 20, because 20 shares. We'll get 20 shares divided by 20 shares for each 100. So for one, it will be 20 divided by 100. Okay, 8,000. That is 8 million shares you will get. Giving total shares of, what is the total shares? What will be the total shares? It will be 58 million. Because you need to find the total shares, okay, to find EPS, earnings per share. You cannot just, this is only for one share, 8,000. Total shares how much? It will be, just think, what will be the total shares? because there's no use of me going forward if you don't understand how you got the shares. Okay, the answer is 58 million. That means 58,000. How? Okay, and the point you have to use is definitely only this point 1. Okay, okay, we'll work out on that 58 million shares later, but first of all let us solve this and get the EPS based on this. What is the loan interest saved? You need to know what is the loan interest saved. Why loan interest saved? You need to know earnings per share. In the earnings, loan interest will come. Definitely loan interest will come in the earnings. It's an expense. So how much you have saved? Why loan interest saved? Because conversion loan, when a loan is converted to shares, before you are paying interest on the loan, correct? Now when the shares are converted, it is converted to shares. You don't have to pay the interest anymore. So because you don't have to pay the interest anymore, your interest is saved. So the loan interest saved is how much? That also you need to know. When conversion loan is there, okay? How much you are saving? Because if you're not getting this correct, the next step which will come, you will not be able to understand it, because it is based on this loan interest saved. It is very simple. What was the tax rate? Because we know interest is tax deductible, so you have to take after tax. Okay, loan interest saved after tax. Definitely is always after tax. So tax rate is 20%. And what was the loan interest? You have to go to your working one for this. If you see the finance cost, what is this finance cost? This was the interest. So now you're going to save on this interest. So, okay, 3023. So after tax, 20% tax if you are deducting, you'll be left with 80%. Okay, so 80% on multiply by 3023. This much. This much you'll be saving after tax. 24 2418.4. Okay, giving adjusted earnings off. So what is the adjusted earnings? What will be the adjusted earnings? This now will be added with your profit after tax. Why? This will be added with your profit for the year, because you are saving this tax. It was an expense which was deducted to get the profit. Now it will be added back to get your earnings. Okay, so what is the adjusted earnings? Okay, adjusted earnings. Okay, adjusted earnings will be, you are adding this with your not this. You have to go like this when you want to go to the Excel. What was your earning from your working one? This was your earning. So you can take here and you see it is 16745.4. Okay, so this is your adjusting earnings. Now you can find your EPS, diluted EPS. Diluted EPS will be what? The formula for diluted EPS is this, earnings. Okay, so now this is your earnings. You need to multiply this by 100. Why 100? Because 100 pounds, okay, $100, sorry. So that earnings you need to multiply by 100. Okay, once you multiply by 100, divide this by close bracket. Sorry, you go here. You close bracket, divide it by what? 58,000. This one, total shares. Because earnings per share, your earnings will be on the top, your total share will be below. So that's why total share. Okay, this you need to drag it to see the whole number. You see 28 points. Now I'm going to round this figure because you have to always take to the whole number. The number comma 0, 29. 29 what? Cents. EPS is always in cents. Okay, 29 cents. So now when you're writing your EPS, you can write working 5, 29 cents. Okay, go to the main table here, 29 cents. You can write. Okay, even this you can highlight it. You see? So all your main answers are highlighted. You have finished all. But now we are done with this question. And before I end this video, I asked you a question that how do you get this 58 million shares? Okay, this question is over. So we have finished all, successfully answered all the 3 requirements. Okay, but how 58 million? 58 million. I'm giving you 2 minutes to think over it. You have this on your left side to go through it. Okay, so here just look at your shares before this conversion. It was 50 million, right? 50,000. Now how much was the shares on conversion? 8. So you add this 50 and 8 and it becomes 58 million. You see, total shares, the word says total shares, equity share before and after conversion, another 8 million will be added. Okay, that's why it is known as diluted EPS. Why diluted EPS? Because EPS becomes, the value goes down and down as your number of share increases. Why? Just go here below and see this B90, which is 58. Okay, this is below in the denominator. So when your number in the denominator goes higher and higher, your answer becomes smaller and smaller. That means EPS becomes smaller and smaller. That means it is diluted. Dilution means what? It is not anymore, the value is becoming smaller and smaller. That's why it is no, that's why they have asked you to calculate diluted EPS, because of this conversion shares. Okay, okay, you can do this with an example. When your denominator increases, your number will, okay, let me show you this example here. So your numerator top part is 2, okay, and your bottom part is 4. This is, so when you do 2 divide by 4, okay, it's 0.5. Now let us change this to, top part is same, we'll change the 5, we'll change the 4 to 5. Okay, it increased by 1 more. So now 2 divide by, sorry, this divide by 5. You see, from 0.5 it went to 0.4. Why? This just increased by 1 from 4 to 5. It is diluting, right? So that's what's happening with your diluted EPS, right? So that's it with the question number 31. Let us go to the next question. I'm just showing you the next question. You can see plenty of workings required. You can see you can scroll down like this. Okay, make sure that when you take this, it will take the page, but you have to scroll here when you want to scroll up and down in the Excel, or when you want to go right and left, you use this to scroll. And this one also you have to see the question in full, okay, otherwise it will not take you to the next page. So let us go to the next page. This is the last question in your practice test 1 for financial reporting. You can see you have been given a word here. This time you have to type. And what is the question? Nature of question looks like it's like a ratio. ROC you have to calculate, net asset turnover, gross profit, operating profit margin. You have to calculate and you have to comment. You have to comment. Okay, so now I'm going to also teach you how to do ratios and how to comment, how to write your answers. Okay, your discussion answers, how to write it. That's a different skill. That was calculation. Calculation is a different skill. Writing, typing your answer is a different skill. Okay, both the skills you have to learn both the skills. As you can see here also you have been given some financial information, you have been given, and some notes at the end. So definitely this case study is not as long as this one. This will take much less time for you to do it. Okay, compared to question 31, the first question in section C. This I will be discussing it in part 4, right? Because it's already it exceeded 2 hours. I wanted to finish that previous one in 1 hour 30 minutes, but I have exited the time. So let us do this in the part 4. So hope you like this video and you have understood a lot about financial reporting, the nature of it, what all the things you need to do, how to do the workings, how to present your answers in the main table, highlight everything. Okay. So in the next video, I'm also going to show you the formulas, the functions, what you can use in the Excel. Okay. So don't forget to subscribe to my channel. Go soon and subscribe, and see you in the next video.